What's up, guys? Welcome back to another episode of the Crypto Rundown. And my God, what a week in the markets across the world. It started off last week in the news flow with the Feds not lowering rates. Then weak economic data came in on Thursday and Friday, leaving everybody a little uneasy into the weekend. And then the Japan shade unraveled Saturday, leaving to everything from crypto to traditional markets and markets around the world heading lower. Now, we didn't panic. We went and did the research, and we brought you a action-packed episode that you're not going to want to miss. So, Brendan, what are you seeing in the crypto markets this week?
Yeah, I mean, like you said, Tevo, all of the markets are being impacted, traditional ones, the crypto markets. And I'll tell you what, I'm seeing one secret pattern on the Bitcoin weekly chart that I think every crypto investor needs to be made aware of. Because as the stock market slowly recovers here, we're seeing cryptos up 10, 20, 30+% across the board. And we also want to make sure that everyone knows that this could be one of the best buying opportunities that we've seen since 2014. And we're going to reference that one as well.
Absolutely. The Fear Greed Index is at an all-time fear level this bull run. We believe we're going to show you that. We break down some other stuff in the news and what we're seeing on Twitter. Guys, the timestamps are below, so you can watch what you want to watch when you want to watch it. Please like, subscribe, comment, and enjoy the episode.
Ladies and gentlemen, welcome back to the Crypto Market Rundown, where we talk about everything that's happening in the great world of cryptocurrency. From the fundamental in the news to the technicals on the charts, we spend the time doing hours of research so that you all don't have to. And in this episode, we have some breaking news. In fact, we're releasing this a little bit early. We're recording this early because there has been so much happening that we couldn't wait. There's just everything that's going on in the world. You've probably seen it. You might have gotten a notification or checked the news out or maybe looked at your portfolio. And man, it has been a wild weekend no matter where you are in the world. It doesn't matter if you're in the US markets, the Asian markets, the crypto markets like we like to cover over here. There's a lot going on, and we're sure that everyone has questions. So in usual fashion, we're going to be covering everything that you need to know and how it could impact your portfolio and just help everyone understand at a high level what in the world is going on in this crazy world of economics. So before we do that, I want to welcome the other guests on here. We got Bryce and Tevo joining me here today. So welcome, gentlemen. How are we feeling?
We're feeling good. Bryce and Tevo fresh off the Del Mar racetracks. Had ourselves a little weekend.
Yeah, what better time to be together when watching huge market action live on our phones? Well, we thought we'd just be having a relaxing weekend, not doing work or worried about the markets. But you know, that's not how we do it here. We're always available, always ready.
Losing money on the tracks, losing money in the portfolios. It was pretty wild combo 1-2 punch.
Well, I'll say this: I think we're better. I think we're better at the portfolios and cryptos than the horse racing.
Yeah, no joke. Hey, it's incredible to be on the Crypto Rundown with you boys. Very legendary sort of week. There was a lot that happened last week that kind of all galvanized over the weekend. And on Monday, we had the largest spike on the VIX in a 24-hour period in history. So it was, and the VIX is the market's fear gauge. It's the kind of the cost of options basically on the S&P. It's like the implied volatility. So we had just literally, what do they call it? A Six Sigma sort of event, something that comes once in a very, very, very rare blue moon. So not only was the stock market rocked and, NASDAQ down 17% off the highs and all sorts of crazy stuff. And we're going to talk about the reasons why, but just to set the stage, if folks who are listening at home felt alone during this period or confused, don't worry, because everybody felt alone and confused. This was a wild move. But we're here to kind of break it down for you guys.
Yeah, and we want to walk through everything in chronological order. So we're going to be kicking it off with what happened Wednesday. What was the beginning of everything that happened? What were the catalysts? And then we're going to walk through Thursday, Friday, over the weekend, how the markets had this crazy futures market open up on Sunday, and walk through everything. So
it was really like a domino effect, right? I mean, like it was one thing that knocked down another thing that knocked down another, and it was just like a whirlwind.
And I think what this was just investors' frustrations just eventually bursting. I think people had been getting frustrated. They'd been getting a little bit irritable with the way that things have been playing out. And this was kind of just the final straw that broke the camel's back. And people are like, all right, enough's enough. And we saw how fast the dominoes fell. And so you're right with that.
Yeah. Well, yeah. What was the first thing that happened? If you were to break it down and say last week, the first sort of event that kind of rocked the world, would that be sort of that FOMC? Everybody was eyes on the FOMC, the Federal Open Market Committee, where they decide interest rates and they didn't cut rates. To me, that was the first domino.
Yeah, I mean, I would agree. People have been waiting. At the beginning of the year, we had this awesome prediction of, oh, we're going to get X amount of rate cuts. Like, people were looking at it, at least 3 to 4 before the end of the year was over. And here we are in month 8 of the year, pushing into August. And people were like, all right, man, like, what's going on here? Are we going to get this? People were speculating. Jay Powell comes out and is like, no, we're not doing it. And people just, again, the frustration kept building. And I think that was the first catalyst. Now, again, nothing major. We kind of grown a little bit accustomed to getting let down from not having some of these rate cuts. But I think that was catalyst number 1. And that's what we need to look at first, is what happened to FOMC here in the United States economy on Wednesday. And that was not getting a rate cut. Now, he still remains optimistic, saying, hey, I think we're going to get one soon. And, most people are looking towards next month. I think the odds are like 90% at getting a rate cut at some point in the next month or so here. And so that's provided a little bit of relief, but that's the first thing that came onto the radar. And then we had Thursday and Friday, the unemployment numbers came out, and it was the worst unemployment that the U.S. has seen since 2021. We had unemployment rise to 4.3%, and that's, again, just not a good thing to see. You never want to see unemployment rising, let alone going to multi-year highs.
Well, the Fed kind of does.
Just not
in a sense, because it helps inflation come down, right? I mean, if inflation, if the battle is for inflation, right, and they kept saying, oh, well, employment is too high. We have too many people employed, too much money floating around.
Yeah.
And so they're trying to break the market in a sense by keeping these rates so high. And now business owners, can't finance their businesses. They can't keep people on. They can't pay overtime, all this kind of stuff. And so that's why the unemployment starts to rise. And the Fed's kind of almost getting what they want here in a little bit, in a sense. And they, of course, they always say they're trying to manage unemployment and keep inflation at 2% and stuff. But, kind of they both go hand in hand. And this is certainly going to help the inflation story with those numbers to start coming down and kind of give them leeway to lower rates slowly.
Yeah. I mean, I sure hope so. We've struggled a little bit in recent months with it, but it does look like we're, and especially with this, hopefully that continues to kind of trend us in the right direction. We've come a long way since COVID, which I think is a great sign, because we were pretty deep there. And I think with us kind of slowly, recovering that over time, it's a great thing. So, hopefully this is the last thing that we needed before we can start to ease on the economy a little bit. Now, the next thing that came up was the U.S. manufacturing. This dropped to an 8-month low. And so what we had here was we had the Institute for Supply Management essentially come out on Thursday and say, hey, manufacturing PMI dropped to 46.8. And what this means is, again, this is the lowest point that we've seen in 8 months. It's just kind of another one of those metrics.
Yeah, another inflation metric, kind of like PPI or PCE or CPI. Just kind of another way that market participants look at inflation in the economy, and that's just another reading that's kind of coming down. So also lends credence to the interest rate cut here later in the year.
Yeah, and I mean, this brings us to the lowest point that we've seen since last November. And I think the big reason why this matters is that this accounts for about 10.3% of the U.S. economy, which is a rather large number. And so people are looking at this, and it's kind of just one thing on another, and it kind of goes back to that domino analogy that we were making earlier. Now, fast forward, right? We had this happening Wednesday, Thursday, Friday. Fast forward to Sunday, right? Most markets are closed during this. The markets started declining. We started seeing some downturn here because of this stuff. And then Sunday evening, the futures market opens, and the Japanese market opens, and they just got destroyed. I think it was what was it? Was it like 13% or more than that? I know it was their worst day since 1987. And there's a lot of stuff that we can go into about why this happened, but this was just the next domino to fall. So, I mean, Bryce, I'll hand it over to you and we can back and forth on this, but
yeah, it was Black Monday 2.0. And it was after 40 years, or I guess 35 years or so since that 1987 collapse, and the market in Japan had never gotten back to its all-time high. And then just like last month, it finally got back to its all-time high, and then it had its worst day in history. Talk about a double top. Really just a crazy, crazy move. And kind of how I think about it, there's and I'm not an expert on the carry trade. So full disclosure, I'm not a Forex guy, but it kind of makes sense what was going on, and people are talking about it on CNBC and Forex News and Fox Business, and basically this week signaled the end of a storied and very productive carry trade that people have been netting 5%, basically borrowing from Japan at 0% rates and then lending to the Fed at 5% rates, or lending to the U.S. government, right, with these the government bonds. And so there's a 5% carry, and people could take that sort of carried interest and speculate on the markets, right, with pretty much a nice little buffer in there of 5%. So it's in a sense kind of free money, and people were picking this up on really high leverage. Okay, so that's the other thing. People were just leveraging and juicing this trade. And then, like you mentioned, Bank of Japan had a little bit of a policy shift, and I don't want to say just a little bit, but it basically went from 0 to 1 in a sense, from like no interest rates, or actually negative interest rates, so you're getting paid to borrow, to effectively starting to raise those interest rates, and it basically just signaled the end of an era, the end of a trade, and everybody who was doing this, mostly hedge funds and very professional investors were doing this with large swaths of money. It signaled an end. So now they're like, all right, well, that trade's done, and we got to go kill that and take those positions off. And it just continued to just pummel the market. And it was pretty crazy to watch this whole carry trade unfold.
Yeah, and all the or most of the financial markets are tied together in some way, shape, or fashion. And this is what happened to NASDAQ and the rest of the markets. And we saw NASDAQ open up, just getting destroyed in the futures markets before hours in the overnight session. And NASDAQ fell. I mean, if we look at top to bottom, it fell by about 17.3%. We're currently down about 12.8%, but it's still a pretty nasty pullback. I mean, when we look at any kind of double-digit pullback for major indices like the S&P 500, NASDAQ, etc., that's a hefty one. Now, I know a lot of people are listening. They're used to the crypto markets. I mean, heck, we do 10% in a day sometimes on the large caps here. But for these traditional indices, that is a massive, massive move. I mean, we saw trillions of dollars get wiped out to the downside over here. Now, again, we're recovering a lot of that, but it was a significant move. There was a lot of capital tied up in something like this. Now, because we had, NASDAQ getting hammered, the Japanese economy getting hammered, other economies were suffering, and one of the only markets that's open over the weekend was, you guessed it, the crypto markets, right? It's one of the few 24/7 markets that are out there, true 24/7 markets that is out there. And one of the only ways that people can respond to this stuff is by going to the crypto markets and front running and kind of getting scared in these events. And we've seen this happen before in previous kind of quote unquote black swan events where people say, hey, this is all happening over the weekend, and the only thing that we really can do is respond by interacting with the crypto markets. So Bitcoin started getting hit, Ethereum started getting hit, altcoins, pretty much everything. And the way that I look at this is that this had more to do with macroeconomics than it did have anything to do with cryptocurrency. However, crypto is getting affected here because it is getting so large. We now have this multi-trillion-dollar crypto industry that is being built And as it gets more mainstream, people are going to look to front run news when they can't do it in the traditional markets with the crypto markets. And I think that that's a big thing that happened here. It wasn't that, Ethereum went offline and Satoshi revealed himself as some crazy source. It wasn't anything like that. It was just the traditional financial players trying to get exposure at a time where they couldn't through their traditional means. And of course, there's a little bit of correlation in any kind of period where there is high volatility. And so, it's a double-edged sword. We see high volatility to the downside. We see people wanting to ease back on risk a little bit because of economic uncertainties. And that just naturally affects the crypto market a little bit.
It seemed like the guys who weren't affected, and Tevo, I don't know if you have some charts for this, but the guys who just didn't even seem to bat an eye were the Bitcoin ETF holders. I think there were like net inflows into these Bitcoin ETFs.
So overall net outflows, but BitB and HODL saw inflows overall. So Bitwise got some inflows. So, but it wasn't as what people thought it'd be a bloodbath, right? Like going to bed Sunday, waking up, being like, oh man, these crypto ETFs are gonna tank on the opening bell, and that was not the case. It was slight outflows, but even in a net outflow environment, a couple of them actually saw inflows.
Yeah, so, I think in that same chart he notes that the Ethereum ETF saw relative inflows, though.
It's true. As of yesterday, Monday, we saw $46 million roughly in outflows, and we saw 94.7 in net 94.7 in net inflows. So, yeah, I mean, we had about a $50 million round of inflows.
Yeah, not bad. I think the important thing is just that while this was all happening, there wasn't just an enormous, disgusting amount of, $1 billion of outflows and, people just panicking and stuff. It seemed pretty mild in the ETF world, which I think is a pretty good sign.
Yeah, long-term visions, right? So Matt Hogan says, Bitwise today, Ethereum and Bitcoin ETFs, people are buying the dip. So, as much as there was panic over the Sunday night into Monday, it didn't show Monday. And I think building on your point, Brendan, Bryce, was Jack Mahler's had a good soundbite where it was, you can't fault Bitcoin for outflows. If there's a global panic, Bitcoin is the only thing that's open. So it's the promise of Bitcoin of the fact that you can get your money. Like you can't get your money Sunday night when markets, when an average person's staring at the futures and all these big, hedge funds have access to trades and you don't, you might be scared too. So that's the promise of Bitcoin is actually you can get your money 24/7. And then the market's open. And I don't know if you saw this, I think Vanguard was down, Fidelity, like all these brokerages, everybody's waking up and
Fidelity, Schwab.
So, as much as the price action was down across the board for everything, people like say, oh, look, your Bitcoin's tanking. It's like, well, it's available 24/7, 365, so that it's the promise of having access to your money as well, as much as the store of value.
Yeah. I mean, I guess you could say it's almost a double-edged sword, but I think that availability is more than worth it. Like you said, I mean, imagine those people trying to get their money out and trying to access banking and all this other stuff, and they're not able to. Mm-hmm. So it's like, oh, yeah, we sold off over the weekend, but, go try to manage your money right now. Oh, you can't. Oh, well, I'd rather have the risks that come with, quote unquote, risks that come with a decentralized market than I would having the errors of a centralized one. And I think that there's a place for both, right? Both have a place, especially in today's economic landscape. But, it just goes to show that people look as the TradFi, era is infallible, as if it's perfect, and it's just not. And even with the insane leaps that we've made in technology, there's still errors. And we have something like this where it's, our economy is getting hit here, but we're not even the economy that's like collapsing. We're just feeling the ripple effects of another economy seeing this stuff, and yet we're still going offline in our banking sector.
Yeah.
And so it makes you wonder, if we truly do have a banking issue like the Bank of Japan and stuff is having, then what's going to happen to those same servers, to those same financial managers and banks? It's going to be even worse.
Yeah, America's the what do they call it? The cleanest shirt in the dirty laundry pile. in terms of its, monetary policy and fiscal policy. It's like you think it's bad here, but it's pretty much worse everywhere else. So we do have it. We do have it lucky.
Yeah, and I'll help tee up our next subject here, fellas. So the people come to the crypto rundown to learn what's going on. I think it's a testament to us that, I saw a lot of panic types of content come out yesterday all over Twitter, X, YouTube, and that's not what we want to do. We kind of had the vision of like, let's wait and see how this shakes out. We'll do it tomorrow. Things change every day, and look today, things are bouncing pretty well. So before we get into the charts, there's two things we want to note. Number one is the fear greed index. So I'm going to bring that up for you. You guys can break that down. And then the back end of that, we're going to bring up the whales. The whales are buying Bitcoin while everybody's scared. So let's break that down. Here comes the fear greed index.
Yeah, so this is a pretty cool chart. I think the website that actually that sources this, it's called alternative.me, like www.alternative.me. And the fear and greed index, basically, it's like, multi-factor sort of analysis looking at sentiment data and kind of, factoring in some prices and all that kind of stuff, like rate of change. And it shows you when the market is most greedy and when it's most panicked. And we have for those who are maybe not listening on YouTube where there's visuals, what we see here on the chart, which shows that the fear greed index is now at 17. And again, it's on a scale of 0 to 100. And so we've only been at 17 a handful of times in the last 5 years. 2022 bottom, back when FTX blew up. The 2020 bottom, when the pandemic started, everybody freaked out. And then the 2019 bottom, which was kind of just a technical sort of bottoming event after, which was really the capitulation lows after the 2017 bubble had burst. It was that final burst. So there's been 3 times. I mean, that's pretty substantial considering that right now we're still above 50K. Many altcoins, I mean, me and Brennan were just looking at the charts a moment ago. Many altcoins are actually up like 30, 40% off the lows from this bounce. So as Warren Buffett says, when there's blood in the streets, you buy, right? When there's fear in the markets, you got to be greedy, and then vice versa. So a pretty good indication that a lot of people are sidelined. The sentiment is low. People are scared. And yeah, I mean, that's pretty much there. And then like you mentioned, there's a chart here by this guy. This is Vivek. I don't think this is the real Vivek Ramaswamy, just some kind of random some random guy named Vivek on Twitter who posted this chart. And admittedly, he doesn't have a source for this data, but we always use various published and unpublished sources that we deem to be reliable, but we can't guarantee the completeness and accuracy of that. So quick disclaimer there. But he shows this, and I assume it's probably like some kind of Glassnode data or some kind of on-chain data. But what he shows is that, Bitcoin whales are actually buying this dip. The largest wallets, the largest holders of Bitcoin, they accumulated over what it said. Large holders accumulated over 84,000 Bitcoin in July, which is the highest sort of accumulation for that wallet segment since 2014. Wow. So big wallets are buying, pretty substantial in my opinion. But that's just one data point to kind of add in, a little feather in the cap there for the bulls.
Yeah, I mean, that is crazy.
Yeah.
And if that doesn't show you what big money and smart money is doing, not sure what to tell you.
Well, I'll tell you what who else was doing something kind of wacky over the weekend. Jump Trading is one of the largest market makers. They're like a multi-billion-dollar firm. They do normal, TradFi investments, and they also do crypto market making and investments. And they were selling off hundreds of millions of dollars worth of Ethereum over the weekend. And on Monday, there was a lot of speculation that they were getting liquidated. They were getting margin called on different parts of their portfolio, so they needed to raise cash. So there was kind of that, selling that was occurring that was, systemic, right? It was part of the whole sort of domino effect. But it's just, hey, when one big player starts selling because they have so much money, I mean, it really does drag the market down. It's just there's not oftentimes somebody willing to just buy $500 million of Ethereum within a weekend. So that certainly dragged the price down. And there were a couple other interesting things that were going on. In a really kind of tragic way. I think this one of the other dominoes that was kind of overlaying this entire thing was the fact that Israel and Iran, the tensions are getting higher. And whenever there's war and uncertainty, markets just don't like uncertainty. They don't know the implications for what the oil prices are going to be. They don't know the implications for, if there's going to be loss of life and all this kind of stuff, a larger regional war. So I think that was just another thing that caused a lot of the selling. And the last point I'll make on this before I hand it over to you for the charts is, Kamala kind of climbing in the polls. The number one trending thing on X or Twitter during the market crash was, quote unquote, the Kamala Crash. And so this is just basically the market saying like, oh my God, the NASDAQ has been correlating perfectly to Trump winning. And so, the market's been rising as Trump's odds have been rising. And then once Kamala kind of came out as the new potential pick, the market started crashing. So, something's there. The markets are sniffing out a rat, I think. And it would be a pretty bad sort of continuation of Bidenomics in the next 4 years of what we had just for the past 4 years. And so I think the market is kind of like, yeah, this is potentially a hedging kind of moment.
I would agree. I think that chart is it's self-explanatory, right? I mean, it's telling. So, we don't want to get too deep into all the politics, but I think that there is a clear correlation right there that is definitely worth noting for any kind of investor, right? Whether you're crypto or otherwise, I think that's something to at least be paying attention to. Now, we also like to cover the charts over here. We talk a lot about prices and all the catalysts, but what's actually happening to these prices here? So I'll tell you what, we're going to throw up the charts on the screen and take a look at everything that is happening, starting with Bitcoin. Ooh. Now, this is something that I have been looking at recently. We're on a daily chart. I'm going to move us back to a weekly chart. And, I kind of like zoom out here and I'm looking at this and I'm like, this looks familiar for any of my technical analysts out there, because we've had this extended move to the upside. Even in the bigger picture, it's really not that bad. And with this kind of pattern that we're seeing of a lower high, lower low, just back and forth here, this is what most people would call a bull flag or a falling parallel channel. And essentially the way that we get this is that despite having lower highs and lower lows, it's bullish continuation to the bottom side. And what we're seeing here is just more of that. Overall, maybe did we see a little bit of an extended move, right, with this wick? Maybe it went a little bit lower than was expected, but I think that's totally normal based on the events that we just got and how volatile everything was. I think it's okay to get a little bit of piercing candle action, but for the most part, it's being bought up. And this trend is still intact. And Bitcoin is still very much inside of this overall bull flag. So I'm zoomed out here on the weekly chart. We can zoom back in to the daily chart. And I'm looking at this. And again, I'm still not that concerned. It might sound crazy. People are going to go, hey, this is a massive event. We'll see as more information comes out, as time goes on, we're going to get a better picture here. But based off of, the first things that I see, this is just a continuation of the bull flag. And again, back to the original idea, this crash had the most to do with macroeconomics and the least to do with anything directly happening in the crypto space. Yeah, there were some players getting liquidated and this and that, but the fundamentals are still very much intact. And I think that's why the technicals are recovering so well. And you can see that on the right-hand part of my screen, these cryptos, most cryptos are up double digits on the day. Here's one that we look at called Centrifuge, up almost 12%, and Goldfinch up 19%. And I saw that another one called Orca was up, I think, 33% or 36% now. There's a Kosh that's up 24%. And so the crypto market is recovering very, very fast. I think people are recognizing that this was an overreaction and they're buying it up aggressively. I mean, even Bitcoin off of this low is already up about 14.5 to 15% since its most recent bottom, right above, I mean, what was this? Right around like $49,000. And so I'm looking at the overall landscape, especially of these large caps like Bitcoin. And I think that this bull flag is something to keep an eye on, because we might have just been a little bit too
something that we've talked about, in referenced back when back in August through October, there was a 2-month period of last year where we consolidated under that 200-day moving average. And a lot of people were saying the bull market is officially done. This is it. We broke the 200-day moving average, which is kind of that key long-term indicator, but we broke it and we had a bullish kind of consolidation below it and then broke out higher. And Brendan, I mean, I could totally see the same thing happening here where, we did just break down below the 200-day average. So that's kind of the sell indicator for a lot of mid to long-term players. And it kind of baits in shorts. But that sort of is the fuel to higher prices. That's how we break above the all-time high. We get that, baited shorting. We get those, really fear-mongering players, the folks who say we lost the 200-day, it's over. And get them to really buy into that narrative for a month or 2 months before sending it higher with some very swift action. And the last thing I have to say on this is that we shouldn't be surprised. We've talked about it in past calls for folks who are in our groups. September and August, or August and then September, these are historically the 2 worst months for Bitcoin. There's just no other way to put it. If you look at a returns matrix on a monthly sort of basis, August, September, those are the 2 worst performing months. So again, we're not saying we're completely out of the woods yet. We're not saying we're bouncing, we're going to all-time highs tomorrow. We're saying, we still got a little bit of work ahead of us. We've got 2 nasty months. We've got clearly the 200, the 50, the 20-day moving average. They are all above where we're at right now, acting as overhead resistance. So we're not out of the woods, but we've seen this before, and it's not really cause for huge amounts of panic or any panic. It's simply an opportunity. And so that's the way I look at it, and I'm excited.
I would agree. Ethereum's in not, too much of a different boat. I think Ethereum saw a little bit more downside, but again, we talked about some players being liquidated and the ETF having outflows recently. And we were expecting that there was going to be some downside pressure. Now, maybe not to this extent, but it just goes to show you that, man, it's important to be prepared. And even just referencing what happened when the Bitcoin ETF got approved and some of that stuff. And I think, above all else, as someone who loves trading and being involved in the market so much, this was a textbook lesson of why you have stop losses in place. Because when the market started moving down, there could just be beautiful entries or beautiful areas for people to re-enter. Now, it's not for everyone, but if you are a trader out there and you're listening to this, whether that's short-term or long-term or any of it, stop losses are an important factor to keep in mind during a lot of this stuff, because you can just never predict when something like this is going to happen. You could leave town, come back and all of a sudden be like, what in the world is going on? And if you left leverage positions open, or maybe you just left a large swing trade open, you could come back and be wrecked. And so, for anybody that's looking at that stuff, it's another thing that we love to use and talk about over here. It's a great tool when it comes to risk management. Now, the final thing that I'll say, before we go, kind of just going back to the traditional side, I saw, and again, we're not saying the bottom's in yet, anything like that. I think it's hard to say that the day after, the first relief day that we get, are we going to say the bottom's in? Not necessarily, but I will say that NASDAQ is bouncing off of its 200-day moving average over here, briefly below it. We've seen it bounce off of it last time, as you can see on my chart right now. And so this is one of those things. And again, I think a lot of this had to do with what happened to the traditional markets. So if we see some relief in the traditional markets, I could see that positively impacting crypto. And we're already seeing that, right? NASDAQ's green on the day, and crypto is wildly green on the day, especially in the altcoin sector. So there are good signs out there. There are signs of relief. Again, we're not saying it's over, but there are good things happening when a lot of people are just looking at this as a net bearish opportunity, going, oh, when can I short? When can I do this and that? And that's really not the approach that we have over here. We're not looking at this saying, when can we sell everything and when can we short and get rid of our bags and this and that. I'd say that we have the opposite approach. We're looking at this going, man, where can we buy the dip? Where are the most opportunistic zones to do this thing? Because a lot of people have been asking for months saying, man, I wish I would have bought Bitcoin in the 40,000s. Man, I wish I could have bought Ethereum around 2,500 or around $2,000. And then now we get handed this opportunity on a silver platter. And, certain people are going to capitalize it and others aren't.
Yep.
But that's the way that we look at this. We're saying, hey, let's get a good understanding of what's happening, but also where can we be buying the dip? Because we're recovering, and we've seen the crypto markets recover fast, and we're already off to a good start. So that's my overall thoughts on what's happening here on the charts, gentlemen. But
good stuff.
I'll open it back up.
No, man, I'll close it back down. That was perfect. A perfect note to end things on. Tevo, any last thoughts from you, brother?
Yeah, just, don't get too emotional one way or the other. I think you guys teed it up, as always, perfectly with kind of your visions of what's going on. But the biggest curveball with, the election and all the hot zones around the world and in a sense of military action going on. And I think the volatility is here to stay, and markets like clarity, right? So you've kind of seen the playbooks of what a Donald Trump win might look like. You've seen the playbooks of what, a Kamala Harris, coming on the ticket might look like. And, the ETF playbook you got with Bitcoin earlier in the year, now Ethereum's live. So you have a lot of data. And if you took any notes or you remember your thoughts or feelings of what happened earlier this year, I think you can kind of start to make your playbook. And as Bryce says, we plan our trades and we trade our plan. So stick with it.
I love it. Well, gentlemen, thank you for joining me. And for all the listeners out there, we appreciate you tuning in as well. All that we ask over here is that if you like the content that we're providing and all the hours of research that we're putting in so we can bring this to you on a free platform, all that we want is for you to maybe check out some of our other links. Check out the YouTube channel, check out the Crypto 101 podcast and all the other great content. Check us out in the different products that we have. And then leave us a like, a comment, a subscribe, leave us a review letting us know what you thought about the episode, maybe some of the things that you liked or even things that we can improve upon and other stuff that we can talk about. Because, man, we love bringing all this information to everyone. So thank you all for watching, and we're going to see all of you at the same time, same place next week.